Trading strategies are the first thing that many traders explore when they're deciding to enter the trading world. And while there are a few other variables that should be considered, finding a way to trade is at the head of the line for most people. And once that strategy has been found, the new trader learns how to plan for the trading opportunity, but when it comes, they don't take their positions. And much of that comes down to not fully trusting your trading strategy. And with a clear trade plan, that calls you to execute your trades. Not taking action on a trade that meets your setup variables is the difference between your assessment of the market and the trade planning aspect of this business. Now, the difference between assessing the market and planning the trades in your daily prep, it comes down to looking for what the markets might do versus planning for exactly what they will do if to try to take advantage if the market does do it. So many traders, they identify the possible market movement and the setups, but they don't consider all of the details that are involved in the build up to and shortly after the moment that the trade's going to be taken. Only accounting for market possibilities in this way instead of intently focusing on the details of how you will take the trade when the trading setup starts to take shape, it demonstrates that there is no trust in the setup, the trading plan, and possibly no intention to execute a trade at all. A well-planned trading strategy, it's not only attempting to take advantage of a certain repetitive market behavior, but it also covers conditional market triggers in order for the setup to be taken. And some common trading triggers that are used, you're looking for the high or the low of a price bar to be taken out that shows momentum in your desired direction. You might use the hook of a trading oscillator to trigger your entry. You might use a moving average crossover in conjunction with a short-term higher-low price structure break. Now, it's one thing to identify a setup, but without an actual event to trigger you into the trade, well, you're going to be on the sidelines of that opportunity. Entries are important, but traders should also realize that they are not as important as they may believe. Now, attempting to fine-tune a trade entry too much ignores that there is an amount of random noise in the market. Now, you might believe that by doing all of your daily prep, you're comprehensively considering all the trades that you might be able to take, and then identifying exactly what you're looking for to validate your setups is enough. But there's got to be a solid motivation for why you are doing this. Otherwise, there'll be no conviction at the most important moments during the session. You might believe that all the work done through market assessment and trade planning demonstrates your intention to execute your trades, but that's not always the case. Putting in all the groundwork, it can be indicative of a trader who wants to take their trades, but for others, it can be about seeing what happens or even that it's what they think they should be doing. Intention to execute comes from self-belief and motivation. Belief in your strategy and what you are doing to prepare and motivate you to take your trades, it creates a very different starting point for your daily preparation. So if you know you're doing all the work that you should be, but you look back at the session and you see trades that you missed or trades that you jumped the gun on, well, then you should know that your mindset is not as it should be. If you're hesitating and you're missing your setups, the chances are that you're struggling to believe in your strategy and you're not using a trading plan, or you have a problem with uncertainty. You have a fear of being wrong or losing. Now, a pretty good remedy for this is reassess your strategy and do a thorough manual bar-by-bar backtest. One thing that we instruct all of our inner circle group of traders to do is to backtest the trading system that they are using. We even provide strategy testing software that you can use so you can crunch the numbers and see the trading edge that you're using. If you're taking trades too early in your execution, you probably have a fear of missing out. You're good at seeing the setups develop, but you can't wait for the appropriate moment to initiate the trade. This leaves a trader with positions where either the level of risk is higher than it should be, or your stops are hit before the market gets to the point where the trade is really no longer working. A possible solution for this is to work out a maximum number of ticks that you're allowed to take the trade outside of your entry location. Think of this as a self-imposed slippage limit that keeps you from entering outside a narrow band of price differential from the primary entry. Hesitating to take your setups and then jumping the gun, that stems from a mindset that many traders struggle to adapt, and that's the one trade mindset. The one trade mindset is that every single trade matters and needs to be a winner, But the truth is that you don't know what the true probability of a single trade is. Only with a reasonable number of the same type of setups can you begin to estimate the probability of the setup. Winners and losers, they come in a random distribution. Now, recently a trader told me that they were looking for another setup right after price had made an out-of-the-ordinary price movement into larger profits. And the reasoning was that he did not want to lose the momentum. So I explained that the only thing in trading that has momentum is the market. Understanding random distribution will prevent you from thinking 1, 2, or 3 winning trades equals a winning streak that has momentum. The goal for your next trade is to execute your strategy correctly according to your trading plan, win or lose, and complete a sufficient number of trades for your edge to play out. Market assessment takes into account more than just how the market's trading. It's also about where trades might end up appearing. If you're only trying to identify where your setups might show up as opposed to identifying where you'll take your trades, you might well find that you're either executing incorrectly or you're not executing at all. With our work with many traders using our systems, our experience is that most traders who have been around for even a short time, they can identify what a good trading opportunity looks like. But the difference between most traders and successful traders is that the successful trader actually executes their ideas.